I know you don't normally care about congressional testimonies. I know you don't normally care about economic data. But today, this morning, I'm guessing you're not going to mind talking about the CPI report. And the reason you're not going to mind is because it's benefiting all of your positions. So all of a sudden, you're not going to mind talking a little bit of CPI because yen is moving in your direction. The 210 spread's moving in your direction. NASDAQ semi-weak and the Russell is strong. So real quick, I just want to give a lay of the land for what that number looked like, what the market reaction has been in terms of Fed implied odds, and then we'll have a little fun in the back end of this. Are you ready, gentlemen?
Sure.
CPI, my friend, month over month, negative 0.1%. We are in deflation territory. Mission accomplished, Tom. Mission accomplished. We've slayed inflation, and all is well again. Maybe not exactly 3%. We're still up 3% year over year. Core was up 0.1%. And 3.3% year over year. You want to know what did it? You want to know what helped do it, Tom?
I don't know. Cars. You tell me. Which one?
Used cars down 10% year over year. And airline tickets. Apparently nobody's buying them. And they were down 0.5% month over month.
Airline tickets are down 0.5%, but the prices are up 300%. So net, it's a win for all the companies. Consumer loses right. Again. It's so true.
Energy was down 2% month over month, which helps to weight it down. And services, which is a large portion, shelter, didn't move. So it was up 0.1% for the month.
Can they revise these numbers, Victor?
Did they revise them?
Can they in the coming weeks?
I don't know if they revise CPI. I don't think it'll like they're revising you're talking about the employment numbers that they're revising literally every month.
Yeah. Exactly.
What's your point? I don't care about any of these numbers. So what's your point?
All right, let's move on. I don't know if you guys can show the slide, but the biggest impact here is they've effectively locked the cutting cycle starting in September 18th meeting. So coming in today, I think the implied odds were we'd start the cutting cycle somewhere around 65, 69%. It's gone up for the September meeting. We're now 90%, nearly 85%, I should say, that the cutting cycle is going to start in the September 18th meeting. And they've actually added an additional potential cut into the end of the year. So you're now looking at they're flirting with adding a third cut into December. You've got 3 additional cuts into the end of the year. My question to you, my friend, or my suggestion, maybe a suggestion, I don't know what to call this, the 210 spread. You've had a little bit of a move in it. I think 5 basis points, something like that. It's normalized here. We came into the day, we were inverted 32 basis points. Deepest inversion was maybe around 50 basis points for the entire year. You could be getting, if we're getting into the cutting cycle, my hypothesis is that you could end up seeing some steepening out of this inversion, which means you got 18 basis points in risk in my wacky world, with 32 basis points of potential reward on the other side. This has been a completely dead trade since October of 2023. It has not moved at all. You are now seeing some movement in yen. You're now seeing some movement in gold and silver again. You're now seeing some potential rotation. It's only a couple hours after the number. Who knows what can happen tomorrow? My point is this the time to finally put on the steepener out of the inversion as we head closer to the September meeting? Thomas, what say you?
You're like a little too much a master of the obvious for me. I'm saying that in a very nice way, because
he's been to sensitivity training, by the way. Scott has him in sensitivity training. This is his watered down version. Go ahead.
Most people would want to put that position on, like Tony and myself and other things. Like we've had that position on, when it was kind of crashing.
So did I. At 100 basis points.
At 100 basis points,
when it's 50.
When it's the most
but keeping it on at 50.
Yeah, when it's the most painful, that's when we had our biggest position on in there. Now it's no longer, there's no pot odds in that position anymore. It's just, it's not a pot odds trade anymore. It's just it's a toss up. Yeah. I don't care about it actually anymore. It was an interesting trade when it's at an extreme. It's a far less interesting trade right now because I don't think it has pot odds.
I don't think it has as good of pot odds when we were inverted 100 basis points as we were 2 times throughout 2023. I would agree with you. But I do think it's been a dead trade for 6 months, and I do think that there's a potential into the next couple of months that it gets a little bit more action. So I like this trade, Thomas, the steepener into the rate cutting cycle. rate cuts to betting odds for just a second. You didn't watch the debate. You didn't watch the ABC interview with Joe Biden. Did you read President Joe Biden's strongly worded letter to congressional Democrats at the beginning of this week?
You keep thinking that I'm somebody else because like you think for some reason that I'm going to change.
Right.
I'm not. Yesterday.
I just think.
No, I watched your Truth to Skepticism a little bit, and the Washington Post actually reported on this. That celebrities have lost faith in President Biden, including Stephen Colbert, Michael Moore, Stephen King, John Cusack.
That wasn't my discussion.
And local B celebrity Tom Sosnoff.
That was not my discussion yesterday, but at all. But I gave my opinions yesterday of what I think is going to happen. But what are you asking me?
All right, here's what I want to do. Here's the fun part of the discussion.
Okay,
or at
give
least
it to
it
me. I
was
want the
going
fun
to be.
stuff.
It's none of this is turning out fun. The letter to the congressional Democrats, I knew you didn't read it, so I brought it to you, Thomas.
Okay.
A couple of excerpts. I want you to know, he starts off in the letter, I want you to know that despite all the speculation in the press and elsewhere, I'm firmly committed to staying in this race, to running this race to the end, and to beating Donald Trump. Later, he talks about the party needing to come together in order to defeat Donald Trump. I want to throw up the prediction market odds in front of you. The Democratic nominee, Biden, is now 45% probability he clinches. Earlier in the week, that was 60%. Last week, it was 41%. So these markets have kind of been all over the place. Pretty decent volume. Kamala Harris at 41%. About a 1 in 4 chance he resigns. Here's my question to you, Tom. If you could buy anything on the board here, what would you buy? Or I suppose sell, but what would you buy here on the board?
What would I buy on the board? That's interesting. That is a good question.
Here we go. Good Lord. It was
Third time's
prickly.
a charm,
We
Victor.
found our way to freedom.
Third time's a charm.
Our way to freedom.
That's an interesting one. If I could buy anything on the board, let me just think about this for a second. If I could buy anything on the board and I only had one thing to buy.
You don't like your choices.
Don't love my choices.
Welcome to the rest of America.
Thank you, Victor.
But here's the thing. If you're talking about this board and you were just looking for the best money, like you're looking for the best return on your money, you know what I mean? Like if you gave me X amount of money to spend on this board and said, how do you want to spend it? I think the best shot on the board, I would take Harris at 21%.
For 2024 president?
Yeah, only because that's a 4-to-1, 4-to-1 payback, which I like. I like that. Risk 1, make 4. I kind of like those odds. If I didn't take those, yeah, that would probably be my number one choice if I had to make only one bet on this board.
I like that bet. Tony?
Well, I'm not going to risk 4 to make 1 in Miss Harris. I'm not going to risk 4 to make 1. I'm going to go with Trump being the president. I mean,
you're risking 6 to make 4.
Taking the favorite.
My biggest sale,
high probability trade versus an out of the money call.
100%.
My biggest sale on this thing would be Trump to be president. I think way too many. I think that would be the easiest sale for me to sell that at 61. I would sell that at 61 before I would do anything else here. The VP choices are uninteresting to me. Everything else is pretty uninteresting.
That is absolutely insane. What?
I think those are the best odds. You're talking about as a gambler. President? As a gambler, those are the best odds on the board.
Yeah, but the odds are what make it even.
I understand. Listen, I thought Dylan and I said it best. I think if Biden does drop out, he drops out next week. They announced Harris to take the PR away from the Republican convention. It makes the most sense. And I talked about it as the NFL move of the week. And that's what I think could happen. If that doesn't happen, then, I think you're getting paid a lot of money to fade Trump, which I think is a really good play.
Interesting. Well, let me ask you, after today's moves,
but you didn't take
here,
Biden for president. You took Harris for president. Use it that way.
I like those odds. Yeah. I like the 4-to-1 payout. Yeah.
I think the Harris for president 4-to-1 payout is a pretty decent. It's a pretty decent bet. I would agree with you on that.
I mean, if Biden drops out and she goes in, and I don't think anybody really likes her, but the thing is, I think she could win by a lot. And the reason for that is, and I think I explained my position yesterday. If nobody ran against Trump, nobody would get almost 50% of the vote. And if Trump ran against either side, it's going to be a 50-50 split, even if nobody runs against the other person. So if Biden ran against nobody, Trump wasn't even in. He would barely get 50% of the vote.
Agreed.
Like Dylan said it best. He goes 5 out of 6 people don't like either candidate. So you're really talking about 1 out of 6 people. When 5 out of 6 people don't want to vote for either person, you have a very difficult situation and very tough to judge.
I mean, most of us can remember every president that's been in our adult life. I mean, has it really made a difference? Like, I don't understand why everybody's so hell-bent on, like, why are we so polarizing everything? Has the president really made that big of a difference in our lives?
The president themselves, not really, but some of the things that
I get it, the Supreme Court, but that's passed already. Like, that time is gone. I mean,
right. Does everything else really matter? I mean,
I don't know why we're getting so, like, I know you want your guy in there.
No.
I mean,
I'm not getting
their guy in there. I get that, but does it really, why do we be so polarizing?
It doesn't really matter because the whole thing is you're deadlocked. You're basically
not the first time in history we've been deadlocked. We've been deadlocked with almost every president. If you consider between
you're going to be deadlocked.
And the House.
And the fact that we're going to be deadlocked means, not much is going to happen.
Being deadlocked's not the worst thing. They maybe do some compromise, which is what democracy is supposed to be about. Who the hell knows?
Real quick add-on, because we had this conversation yesterday. One of the questions came up that Donald Trump, if he does in fact win the 2024 presidency, has said that he would not reelect Jerome Powell, chair of the Federal Reserve Board. And so the question was, when does his current term end? And it doesn't end immediately. His actual chair doesn't end until May 15th in 2026. So he looks like he's going to have some leeway to continue his either QT or QE infinity or whatever path we're going to end up being on when September starts. Let me ask you this as I get out of here. Now that you've seen the move post CPI, the yen trade, the Russell trade, and let's call the Russell trade, the rotation trade, and the 210 spread coming in a little bit, I think around 5 basis points. It might be a little bit more than that. Do you still feel like those are interesting trades on the board, or is the extreme for you completely gone? Like once you get your first move, are you done? Or you still believe that there's some room here in all of those trades?
I believe there's lots of room remaining in the Russell verse. I think there's tons of room in that trade. That trade hasn't even
moved. I mean, today's the first day we're today's not the first day, but today's close.
Today is the first day. So the Russell versus anything else.
You're talking about the pot odd trade from the bonds earlier, yeah.
I think with respect to the Russell, yes, it's early and that trade is not gone at all. I think with respect to China versus that trade is not gone at all. There's still a ton in that trade. I think with respect to the yen, there is still a ton in that trade. I've thought the dollar, I've said this, I've been beating the drum on this. I thought the dollar is so vulnerable now. I expect the dollar to get annihilated. And so I do not think that trade is, I'm talking about going into the next couple of years. So I don't think any of those trades, I think long China, short U.S. equities, I think short the dollar just because it's been up so much for so long. And I also think, long Japanese yen and then long Russell versus the S&Ps and NASDAQ is the play to have on for the next 6 months to a year.
Add the 210 spread in there, and that has my stamp of approval.
I mean, the 210 spread, I agree. I think that spread's going to go back and we're going to normalize. I just don't think it's as interesting to me as it was 60 basis points ago. I think right now, you're much back to risk one to make one. And I still think that things like the yen and the Russell have much better pot odds. I'm a pot odds person. I think those things have much better pot odds. I don't see the pot odds jumping out at me on the yield curve inversion.
I don't disagree. The Ethics Act came out. I know you talked about it with Vanetta earlier today, which is effectively banning members of Congress, their spouses, dependent minors from owning, trading securities or commodities or futures. I think this is something we've disagreed on this for a while, and it satisfies no one. Like, it doesn't have the pre-reporting that I hoped it had, and it definitely wouldn't allow members of Congress to participate in markets at all as you want. So they've managed to satisfy almost nobody with this thing.
It's funny. We did talk about this. I'm really opposed to this on every level. So whether it's a good bill as far as the way it's written or a bad bill, I couldn't disagree more with its purpose. I think it's going to do a huge disservice to the future of finance, and to support this is just not understanding the value of having people in Washington actually use our financial markets so they understand how our free markets work, why all the money is here. I just think it's a disaster.
This one does have teeth, by the way. So the penalty for continuing to hold or trade covered assets in the bill. So the penalty would be the amount that is greater than their monthly equivalent of annual rate of pay, so their monthly salary, or 10% of the value of each asset in violation. So this,
I don't care what
the real teeth.
I don't care about that. What I do care about is that the purpose of this bill to get people to step away from finance is just absolutely misguided. It just shows how bad our politicians are with respect to understanding realizing what they need to understand versus the optics of what they think people are taking away from them, using our markets. I think every part of this, it could be solved with education. It cannot be solved with this kind of legislation.
If this passes, what are the odds that Pelosi steps down instantly? Instantly. He's like, oh, well, the party's
immediately,
over.
If not sooner,
the bad part is if this passes, we could get lots more legislation is all about optics. Like just think about things like they can throw payment for order flow up there. They throw all these things that nobody understands that they just think have bad optics. It can start to snowball and really hurt the trading business and hurt the exchange business and hurt every aspect of it. This is the really bad stuff. This is the people that have no idea what they're doing, trying to do something that they think looks good to their constituents and looks good and has good press around it that's really completely counterproductive.